Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 30th of July, comes to you from London. We start by looking at the dollar, just pushing higher after last week's GDP numbers, and we're just still sitting at these sort of higher levels. So bullish on all three time frames. Dollar strength is still the theme, and if we look at the euro, we're just struggling below the cloud on the medium and short-term charts. So that dollar strength giving the upper hand. Just crossing on the yen, so we're seeing a little bit of an improvement there short term as well. And on sterling, we are just seeing sterling static at about 131. Interestingly, we've got interest rate decisions this week from a few central banks, but of course, sterling will be very affected by the decision from the Bank of England on Thursday, so it'll be interesting just to see how the sterling behaves in the run up to that. A widely expected interest rate rise, although recent numbers have potentially put that on hold, so we'll just need to see what happens in the run up to that. Potentially volatile week for sterling. Looking at sterling against the euro, fairly flat at the moment. Against the Swiss franc, also flat, and against the Aussie dollar, 177. So just still sitting fairly static. Bitcoin down about 1% this morning, but still making this medium-term recovery. The lagging line not quite through on the cloud yet. We do still have this upside target of 8,900 on both the 1% and half percent point figure charts, and 9,180 now activated on the short-term chart. So it does look like Bitcoin will go higher. Looking at the S&P 500 index, on Friday we did see a sell-off, but still holding its bullish trend. Not managing to take the January high yet, so still the market quite subdued. Nasdaq did manage to do that, of course, but did have a sell-off on Friday. See that big red candle there, and we did cross below the cloud. So US tech stocks still not really clear in which way they're heading. The Dow Jones industrial average wasn't down by as much on Friday, but again, nowhere near its high at the start of the year. So market's still struggling some months on. And if we look at the Russell 2000 index, we were down quite significantly on Friday, and that's put us into bearish mode across the board on US stocks. The futures this morning, the S&P future down about 0.15%, the Nasdaq down a third of a percent. So it does look like US tech stocks are in for more of a push down today at the opening. Looking at UK markets, FTSE down a third of a percent this morning, and the mid caps down not by quite as much, but still a bearish picture there. The DAX looking stronger, not down by as much, down 0.16% this morning, and the CAC 40 actually down about 4.4%. So we are seeing quite a sell-off there as well. The Japanese market also was down 0.5% overnight, and the Hong Kong market down 2/3 of a percent, and the Chinese market not down by quite as much, but still sitting in the doldrums, having made significant lows, and the move from its high this year is still significant. China, but not at all out of the woods. Looking at the Indian market, looking stronger, up 0.2% overnight, still the strongest looking market in the Asia region, and looking at the Australian market down a third of a percent, so just struggling a bit there. Brent crude sitting at $74.42, so that's looking better this morning, and if we look at WTI, up 0.45%, so stronger there as well. US nat gas up 2/3 of a percent, so looking a little bit stronger at 280, and we are just in a sort of short-term bullish trends. We've got targets back to the sort of 290s area, but at the moment we might just be finding some support on the lagging line for US nat gas. Gold is sitting at 12.21 this morning, actually down now 12.19, 12.22. It's just fluctuating a bit, and we are seeing it's still looking bearish below the cloud, and we do have a new downside target that has been set, not yet activated. We did have a downside target that was negated with a move last week, so really need to keep an eye on gold. And in fact, if you look at the 1 minute chart, we see here 12.11 is the target that we're currently gunning for. Only a lone target. We do still have two upside targets, so that's quite key. This upside target has been negated with this move below, so quite a mixed picture for gold at the moment. Looking at silver this morning, um, down about a third of a percent. Also, just looking bearish on all three time frames. So that's just a little bit worrying. U.S. 10-year bond yield sitting at 2.97%, having nudged that 3% level last week. We do have quite a lot of targets here on the short-term chart. We got 3.13, 306. 299 not yet activated, but looks like we will go back above that 3% level. And if we do that, we potentially activate this target to 3.83% on the 1% chart. So that'll be interesting to watch that happening. Apple stock was down on Friday, down 1.66%. We saw tech really selling off across the board on Friday in the US. Twitter was down some 20%, which really didn't help the market. Amazon bucked the trend up 0.5%, and Alphabet Google was actually also down by 2.3%, so big moves down there as well. Facebook also struggled after last week's fall, sitting at 174, so down 0.77%. Not really bouncing off that move last week, so that's really weighing on tech now. And Microsoft back to 107, having been as high as 111 at one point there. And Netflix, of course, had big sell-offs last week. They were down a further 3% on a further 2% on Friday, not taking out the low yet. A lower low, of course, would be bad for Netflix, but tech stocks generally on a knife edge. It'll be interesting to see how they fare this week. That's it for today. Until tomorrow, happy charting. See you then.